This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices only steady now, even though we did have a series of economic reports that did come in better than expected. For example, GDP for the third quarter up 3.1%. The guess was up 2.8%. We had existing home sales better than expected. We had the Philadelphia Fed index coming in better than most analysts were anticipating. And yet futures only trading steady. It could be viewed as a sign of weakness over the near term. Also, we are seeing apparently some difficulties in the budget negotiations, this being somewhat of a negative as well. Don't forget that we do have fourth quarter corporate earnings coming up to be reported in the second week in January. At least that's when the unofficial start of earnings season begins. Most likely these numbers are going to be weaker than what we saw in the third quarter. So most likely we'll probably see some pressure developing over the near term and into next year, with these earnings numbers likely to be disappointing. Over the currency markets, seeing the dollar index weaker. Most European currencies are higher. This appears to be related to the situation of the budget negotiations, which apparently are taking a bit of a turn for the worse. Seeing the yen holding up relatively well, even though the Bank of Japan did come in with their quantitative easing plan increase. In fact, if you are counting, this is the 9th QE program from the Bank of Japan, apparently with not that much success. The reason the yen is higher is that there was some feeling that they could have done more as far as additional stimulus. And in the credit markets, futures holding up well. Once again, it's the budget negotiations that are supporting this market. Also, we did have solid demand at yesterday's 7-year note auction. The Treasury is selling $113 billion in debt this week. So once that supply is out of the way, I think we can see continued gains in the credit markets into next week and probably into next year as the global economy continues to slow. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.